Hello everyone, good morning and welcome to today's morning report. Chart appraisals on Thursday the 30th of March with me, Rich Perry, market analyst at Hantec Markets. We've got a sort of relatively stable open on equity markets, mildly positive. That came as Wall Street was reasonably solid yesterday. A bit of a dollar positive reaction though, with the dollar marginally moving higher. This is interesting because we've got Treasury yields which have picked up in the last sort of couple of days. Now this is interesting also that the 10-year hasn't really taken off, and if I show you this chart here, you can see that the dollar, which is the yellow line, has picked up whilst the 10-year hasn't. Now does that sort of question the dollar strength? I think it does slightly. Now we've seen, as I said, S&P 500 or Wall Street markets just marginally positive today, and again that's helped to stabilise sentiment in Europe, but generally speaking we are sort of dollar positive and equities marginally positive as well, but as I said again, how much that move continues on the dollar we'll wait and see, because there is a slight safe haven sort of move on markets, or support anyway, because you've got the yen which is supported basically the gold price and also the 10-year treasuries as well. So questions over sort of the prospects of possibly growth going forward and inflation. Now what we have got to look forward to today: German CPI and US GDP final reading. Let me just show you German CPI. Now the interesting thing is German CPI, you get the states, the individual states reporting throughout the morning, and they're all coming in on the lower side, aren't they? And that's sort of reflecting, I think, the fact that the market's expecting German's HICP to fall to 1.9% from 2.2%. So that's interesting. Now obviously German inflation has been accelerating higher in recent months, but just pulling back is the expectation there today. Into the afternoon, after all this commodities data, you've got the GDP, final reading of GDP expected to be 2.0. Now this is final reading for last quarter, 3.5, but the GDP for the second reading was 1.9%, so that's a slight upward revision to 2.0%, but certainly not as strong as the third quarter. And then you've got weekly jobless claims which are expected to be 248, so back down towards the levels of where it has been generally previously. So that's what we've got to look forward to today. My chart of the day is the sterling yen. Now this is an interesting chart because we have been in this downtrend, pretty strong downtrend since December, and look at that support. That support which came in at 138.40, 138.50 area, time and time again used as the basis of support, but that broke last week on an intraday basis and then started to break down on an intraday basis, and then yesterday confirmed the breakdown on a closing break, 138.05. Now this certainly suggests that I think rallies are a chance to sell on this chart. Look at these momentum indicators just tailing lower again. That RSI is below 40. That's the lowest it's been since January. 40 there, 40 there. So it's below 40, lowest it's been since January. Stochastic's falling, MACD line's falling. The RSI, the hourly chart shows you falling moving averages. Negative configuration, just crossed lower bearishly on the MACD lines, on the hourly MACD lines. Stochastic's falling. That reaction high, I think, shows that rallies are a chance to sell. 138.70, just above that 138.40 breakdown level, just reaffirming that 139.40 area of resistance that we got on Tuesday. So it certainly looks as though that rallies are a chance to sell on this sterling yen chart. We're not really getting the sterling bounce yet from that Article 50 triggering the sell on rumour, buy on fact bounce that some had been talking about. You've got technically, certainly, rallies are a chance to sell on sterling yen. The yen remains a bit of an outperformer on these markets, and certainly this chart is reflecting that. So a retest of that kilo 136.43 looks to be on the cards, so selling into strength for that. So I wish you good luck in your trading, and I'll speak to you later. Thank you.